Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, August 15th, halfway through the month. Wow, kids are already going back to school. Hey, we do got a bit of economic news releases, as you can see here. We'll start with the Producer Price Index. This is the inflation numbers on the wholesale level. Now, this is important, but not the most important, primarily because um, sometimes inflation goes higher, or cost of goods go higher on the wholesale level, and it doesn't always get moved over to the consumer level. So those costs aren't always passed over to the consumer. So, and that's what we really look at when we look at the favorite gauge of the Fed is the PCE, or personal consumption expenditure, and also they look at the CPI report. So in this one we got we had a 0.4%, so a pretty big jump back in June. Remember, we said we were going to try to keep an eye on these as we had a couple months there, about 2 months where we had some pretty big spikes, and then we had that 0.4 back in June. So the forecast for July was at 0.1%, and it came in at 0.1%. Now, if you take out the food and energy, we had the core, and that did go a little bit higher at 0.2%. But overall, year over year, so if you look at over the last 12 months, we're at the 1.7% threshold, still below the 2% Fed's mark, where the Fed likes to keep it around 2%. So we're still below that. It was up to 1.9 in June, so it actually dipped lower in the month of July here. So good news in that respect right there. Empire State Index, this is the manufacturing in the New York region, so we had a 25.6 on the index, rating on the index over in July, and for August the forecast was supposed to dip down to about 20, and it dipped down much further than what we expected. So not as good of numbers. There's still obviously activity going on there, but not as much as we thought at 14.7. Industrial production for July, so we had a 0.4%. For June, we were supposed to dip down a little bit, 0.3, and it actually came in at 0.4%. This is basically due to the increase in the production for autos out there. So decent numbers there, nice numbers. Capacity utilization, 79.1% for June, so not much of a change. For July forecast at 79.2, and it came in at expectations. Consumer sentiment, we had 81.8 in the month of July, and it was supposed to go up to 82.3, and it actually went backwards. So people are feeling a little bit less confident, and a little less happy about where things are at currently. So basically, the big ones today would have been the Producer Price Index, the Empire State Index, and consumer sentiment. Those are your big ones, and we definitely had mixed results here. So let's see how the stock market's doing. Actually, it started up this morning, and then there became some concerns later in the morning with what's going on in Ukraine. So there's some convoys, some humanitarian aid coming from Russia going over to Ukraine, and they're doing some inspections, and basically there became a lot of concern that it was risen. It's been rising from this. Some Ukrainian people are thinking that might be a prelude to an invasion by Russia and stuff like that. So it's creating a little bit of chaos in the markets, and as the stock market went up initially, it came down once these concerns came to light. Also earlier today, this morning, was some comments made by a Fed member, Kokola Kota. He's one of the more dovish members out there. And basically, he feels that the jobs numbers are much further away than we anticipated, primarily because he thinks that people who are eligible to work are having the numbers are being misled on the unemployment coming down. That a lot of those people are working part-time jobs versus a full-time position, and obviously we'd rather see those people working more of a full-time position, having more money, be able to get the economy moving. So working part-time, they're probably struggling making their bills and everything else. Also on the inflationary side of things, he says he thinks that will be contained until around 2018 is some of the comments he's made. We've been, since the recession, averaging rate of about 1.6, which is still well below the 2% mark that the Fed likes to be at. So those are some of the comments he kind of made out earlier today. All right, folks, let's take a look here at the bond market, and that's what we've been kind of waiting to see. And we're getting some improvement. So, again, we're kind of getting some benefits here. We start off at 102.20 this morning. We're up about 102.26, and getting some improvement. We actually did hit 102.30, so it's been kind of averaging between 102.22 and 102.30ish so far this morning. All right, folks, so that's enough for better pricing today. So we've got a nice price improvement. All right, thanks for watching. Hope you guys have a wonderful day, and we'll look forward to seeing you guys on Monday. Enjoy your weekend.